program. My name is Zai Hao, and I am from Market Development in Lloyd's Asia, and I will be your host for today. The theme of today's session is revolving around accident and health insurance. Specifically, the topic discussed will be the loss of income from accidents or illnesses, what to watch out for, and how we can mitigate this risk. Our presenter today will be Ms. IDC, Senior Accident and Health Underwriter from Canopius Asia. With a wealth of regional and global experience, ID has 12 years of experience working in Lloyd's syndicates in Hong Kong, Singapore, and London. Currently based in Singapore, she targets specialist personal accident products, including high-risk occupations, as well as package facilities and schemes in Asia. ID is also the chairperson of Lloyd's Accident and Health Market Development Group for Asia. If you have questions at any point of time during the presentation, feel free to use the Q&A function in Webex, and we will try to answer all questions at the end of the presentation. Without further ado, let us welcome ID. ID, please.
Good morning, everyone. Thank you for joining us this morning to look at loss of income from accident and/or sickness, what to watch out for, and how we can mitigate this risk. A couple of housekeeping items before we start. Throughout the presentation, I'll be referring to loss of income insurance. And for this webinar, we are specifically looking at loss of income from accident and/or illness, which means there's always a loss trigger that's tied to either an accident or a sickness event. We're not talking about unemployment insurance, so we want to just sort of get that quite clear in the beginning. When we refer to loss of income throughout this presentation, it's always with the view that it's tied to accident and/or illness. There will also be some polling questions throughout the presentation as well. Please feel free to share your thoughts there. We hope these questions will help you think about loss of income in a new light. And next, please, Wanya. And with that, that brings me to our first polling question of the day. You should be able to see on the right-hand side where you can submit your answers. The question is, without your paycheck, how long would you be able to make your mortgage or rent payment, buy groceries, or pay your bills without feeling the pinch? There are four options. Option A, immediately. I live paycheck to paycheck. Option B, 1 month to 2 months. Option C, 3 months to 6 months, or option D, 6 months and more. You have 30 seconds to answer the question. Okay. So it looks like some of you think that it'll be 1 month to 2 months, but the majority of you who've answered the question has put in 3 months to 6 months. So actually, that puts you in a much better position compared to our counterparts in America. A result have shown that 7 in 10 working Americans couldn't make it a month before financial difficulties would set in, and 1 in 4 with the problems immediately, according to a Life Happens survey that was done last year. For those who submitted their answer and said that they can last 3 months or 6 months or more, I presume that you're relying on your emergency savings or regular savings to plug the gap. And so the question then remains is that the most capital efficient way to cover a loss of income from accident or illness? Is it the most efficient to rely on your savings that can otherwise go towards other investments? Next. And that brings me to the agenda for today. So we'll be talking about loss of income from accident and sickness. We'll be looking at it from 3 different angles: why we need it, what is it, and how do we mitigate it? It's important to understand the why in the different markets. When we look at APAC, we're covering a lot of the territories here, and each country will have its own culture and risk management needs. If you realize, if you think your client's need doesn't specifically fit into some of the models we'll be covering, I hope that you still reach out to us to have a discussion with us so that we can understand the why from you and be able to propose a risk management solution around your client's needs. Next. So with COVID-19, a lot of the loss of income has gained some attention in the media. You have, for example, at the top, Asia Insurance Review reporting that COVID-19 causing 80% of working Indians to experience income loss. We are talking about income from accident, loss of income from accident and sickness in this webinar, but I think still the situation with COVID highlights two very important facts. Number one, a lot of people, even the ones with a job, will lose income simply because they're unable to physically go to work because they're sick. Number two, I think this situation has also highlighted the fact that not just the older generation, but the younger generation will be impacted by sickness as well. I think up until now, a lot of the younger generation workers tends to ignore the chances of them not being able to turn up to work as a result of an illness. I think this recent situation with COVID has highlighted the fact that, COVID or not, there's a real risk of a young and otherwise healthy individual contracting a sickness that will leave them unable to go to work for a period of time. The second headline you see in the slide is another one done by Asia Insurance Review, talking about gig economy on the rise in Malaysia and the income protection lags that they've noticed. We'll go a bit more into gig economy in the later slide, but I think it's interesting to see that this sector is gaining some media and official attention because of their lack of income protection, particularly when they're injured or sick and unable to go to work. The last headline there talk about loss of income risk prompting rush for life cover. This, I think, is quite interesting because there seems to be a mismatch between the risk that an individual see, being loss of income, could be from or sickness, and the solution that they go after, which is a life cover. Life cover has its place in one's financial planning, but of course, it's not going to kick in until you pass. So in between losing the ability to work to that, there's still financial obligations that needs to be met that's not going to be serviced very well by a live product. Next. And that brings me to our second question of today. During your working career, how likely is it that you suffer a disability that keeps you out of work for 90 days or longer? Again, there's a panel to your right that you will be able to submit your answers, and you have 30 seconds. All right, I see you have, there's 22% of you saying it's 3% chance, 17%, 20% of you saying there's a 17% chance, 8% of you saying there's a 25% chance, and only 4% of you says there's a 33% chance. Actually, the reality is a lot worse than what we might think. There's actually a 3 in 10 chance that you will suffer a disability from either an accident or sickness that keeps you out of work for 90 days or longer at some point during your working career. And bear in mind, this is talking about pre-COVID data. So it's not just COVID that we have to worry about. It shows the 33% chance shows that there's a genuine risk of one losing one's ability to work temporarily as a result of either an accident or a sickness. And it's also worth pointing out that we're talking about statistics that's for 90 days or longer. So which clearly means serious disability from accident or sickness. And we're not talking about anything that sort of falls in between 0 days to 90 days. Next. Now let's move on to look at the why. Why do we need loss of income protection? We'll be looking at this from 3 different categories, being employers, permanent employees, and freelancers or gig economy workers. As an employer, it's important to look at your legal obligation. What is legally required of you based on where your business is operating at to continue to pay salary to an employee who's unable to work because of an accident or an illness. In addition to that, as an employer, it's also worth thinking about what additional benefits you want to be providing to your employees beyond the minimum legal requirement, as either as motivation to retain staff and to ensure the success of the business. Number 3, as a business as well, and this is especially true for small business owners and entrepreneurs, will losing certain employees have a significant impact to the business's income? The extreme example would be if you run a show business and your biggest star of the show is injured or is sick and therefore cannot perform for a period of time. Would people still come to see your show? Even if we were to take a step back and look at, say, restaurants or a clinic or even a tuition centers, as we all well know, there are some star tutors out there. Your business income can be dependent on one or few key employees. So their physical well-being and their ability to turn up to work will have an impact on your business revenue, and your business could suffer if they're unable to show up. Next, we're going to look at this from the point of view for a permanent employee. As an employee, it's important to know, will you still get paid if you can't go to work because you're injured or you're sick? How long will you continue to be paid? And most importantly, are you going to get paid 100% of your pre-accident and pre-sickness salary? When we get to the legal requirement for some territories in later slides, you'll notice that sick pay oftentimes does not mean 100% salary paid in some territories, and not even remotely close to 100%. And so when considering your need for loss of income protection, it's important to look at the financial gap that you'll be left with without having proper coverage in place. And the last question an employee needs to consider is, how long will you be able to sustain the lifestyle that you're accustomed to? And this ties back to the question at the very beginning of the presentation. How long can you rely on your emergency funds before it having an impact on your other financial plans, such as retirement or children's education fund? And more importantly, even with enough savings, is this the best way to spend your savings on when you could share the risk with the market at a lower cost and have a peace of mind that you will continue to receive a reasonable income should anything happen? Next, we're going to look at freelancers and gig economies. And I'm afraid for these guys, it's really, there's currently no legal protection for their income if they're in an accident or if they're sick. Wenya, can you click the slide again? And for them, it's straight to the piggy bank, straight to your own personal emergency savings if you don't have a personal protection in place. Next. Now let's also look at the legal requirements in different parts of Asia. As an employer, it's important to understand your legal obligation. But as an employee as well, you need to understand what legal protection you're entitled to and if you need additional cover in place. In China, for example, sick leave is on a scale depending on how long you've been with the company and how senior you are. Obviously, the protection is better for more senior individuals who's been with the company for a long time. But at the other end of it, it can also go down to only 40% of salary for a limited period of time. With China being such a big country, the regulation tends to vary depending on the city you're at as well. So if you're looking to move jobs or to move to different cities, you might be faced with slightly different minimum legal protection. In South Korea, sick leave from non-work related illness or injuries is actually not covered by law. Of course, a lot of the employers, as a general practice in the market, will provide time off work. But then as an employee, you are completely reliant on your employer's goodwill and employee benefits. In Taiwan, you're entitled to 30 days of sick leave when you're not hospitalized, and up to a year of sick leave within a 2-year period if you are unfortunately hospitalized. So that sounds pretty good, but the legal requirement is such that only half pay is provided. Lastly, for Singapore, you're entitled to 14 days of paid sick leave and up to 60 days if you are hospitalized. But this is, of course, pro rata if you haven't been working with the same employer for 6 months or more. Overall, I think you'll be able to see that there are limitations around the percentage of salary paid and the period that you get paid for. And this is oftentimes tied to time served with the employer. So as an employee, therefore, there's certainly a gap in cover based on the minimum legal requirement, and it's a gap that can result in some pretty significant financial consequences if there's no separate or additional cover in place. Next. Now let us look at some specific example. Andy Lau, for those who might not be familiar with him, he is probably one of the most commercially successful singer and actor in the region, particularly in China, Taiwan, and Southeast Asia. He fell off a horse shooting a commercial in Thailand back in 2017. And as a result of that, he was hospitalized for 51 days and then afterwards spending an additional 6 months at home to recover. Lucky for Andy Lau, he's got a policy in place to cover this loss of income because of the injury. And allegedly, the market paid 10.3 million US dollars for the about 8 months that he was out of action. So Andy Lau with the cover covering his income, so he is probably okay. But can you imagine if you are the production company who's already invested in movie production or concerts? What would your financial loss be from this accident? Because your star can no longer do what he's signed up to do. And if you are his agent, how much income would you lose because he can no longer fulfill his legal obligation to perform at a fixed date and time? Now, let's face it, we're not all superstars, but this situation, I think, can also have some significant impact to the regular business owners and entrepreneurs. As I've mentioned in previous slide, if you are, say, a owner of a marketing firms or clinics, you run a restaurant, you face certain risks to your business if your star employees cannot turn up to work because of an accident or illness, and you therefore have an insurable interest in their physical well-being. Business owners should therefore review their risk management approach and consider whether or not they need a loss of income policy tied to the physical well-being of these key employees. Next. And lastly, for this section, let's talk about the gig economy workers, the freelancers as well. In Cantonese, there's a saying called 手停口停, which roughly translates to if your hand stops, your mouth stops. So if you stop working, you stop eating, which is kind of the situation that the gig economy workers face. If they're sick or injured and couldn't work, their source of income will stop completely and immediately. As the news headline from Malaysia before shows, there's a serious income protection lag when it comes to gig economy workers. Governments around the world has identified that this is one of the most vulnerable segments of the working population. And there's a lot of them as well. Just in China alone, and this is back in 2018, it was estimated that there is 110 million freelancers based in the country. The sector has since grown exponentially, and we actually struggle to find up-to-date statistics because it changes so fast and there's so many of them. With the economic downturn as well, we expect companies will resort to hiring gig economy workers to replace some of the permanent employees as a way to save cost. And we think this will only magnify the problem of lack of income protection for this sector and its impact on society. At Canopius, we have been distributing this product targeting gig economy workers outside of Asia. But we also see a big opportunity for this product to take off in Asia, considering the scale of the gig economy in this part of the world and the sheer number of people involved. Next. In our experience writing international accident and health risk, we've noticed loss of income is a product that's very common in the US, in Europe, and Australia, but doesn't seem to be quite as prevalent in Asia. Part of the reasons for this gap in cover in Asia, we think, is driven by the savings culture in the region. And this brings me to another polling question. On average, Americans save 7 to 8% of their personal income to go towards their emergency funds for situations like loss of income as a result of accident and sickness. What do you think is the average savings percentage in China? There are 4 options you can choose from. Option A, over 10%, option B, over 20%, option C, over 30%, and option D, over 50%. Similar to the questions before, you have 30 seconds to choose your answer on the right-hand side of your panel. Okay, so the result is in, and 10% of you says over 10%, 19% of you says over 20%, 19% of you says over 30%, and 7% of you says over 50%. Very ambitious. The correct answer is over 30%. And even though it's not quite as high as over 50, that is still a significant multiple compared to our counterparts in the US and in Australia. And this shows that in China and arguably in other parts of Asia as well, people tend to rely on savings for rainy days, such as losing an income due to an accident or sickness. We've learned from the insurance purchase habits in the Western economies that you can invest in loss of income or disability policy and put less in your emergency savings to then not only increase the spending power of your paycheck, but to also offload the risk to the private marketplace so that you can have a peace of mind that you will continue to receive an income should you lose the ability to work temporarily. Next. And on that brings me to the next section of the seminar, the what. What is loss of income, accident and sickness, and what it is not? There are currently some products in the market that attempts to cover some elements of a loss of income risk. The first one being daily hospitalization income. This product tends to be an add-on to existing group personal accident policies and is quite popular in countries such as Taiwan and China. Oftentimes, it's a monetary amount per day, depending on how long you were admitted in the hospital, and tends to split between an amount for normal ward admission and a slightly higher amount for ICU admissions. Limit can range from $30 US dollars a day to north of $100 US dollars a day, and it's normally capped at 90 days, if not less. This product, being a daily hospitalization income product, is, excuse me, I think I've lost the screen there. There. This product, being a daily hospitalization income product, is of course tied to hospitalization. So no hospitalization, no payment, which means recovery time at home. So for instance, if you are Andy Lau, the 6 months that you recover at home, you will not be receiving any payout from this rider at all. The other popular alternative in the market is critical illness product. Critical illness product is interesting because the list of illness can vary depending on the products you purchase and also depending on the territories and the local norms. And is oftentimes used to substitute medical insurance cost and loss of income. So it kind of serves dual purpose in a way. And with that, therefore, I think one needs to consider is to limit your buying enough to cover both your medical cost and your potential loss of income cost. And of course, we also need to consider the scale of critical illness that we're buying. Some CI products would only cover major cancers, for example. And so it might not be the most suitable product to cover you for your loss of income risk. And Wenya, can you take a click in, please? You see here is statistics from the Council of Disability Awareness in the US. These are causing most of the claims from people who could not work temporarily. And these are not the kind of claims or the kind of sickness that you would expect a critical illness policy to cover. And with a CI cover, you're kind of hoping that one of the conditions that's covered under your product policy is the reason why you're unable to work temporarily. To put it in property insurance terms, why would you rely on CI with named perils when you can buy an all-risk policy to cover a loss of income? Next. And next, we're going to have a look at loss of income or temporary total disablement. Temporary total disablement, or TTD, is a term that's often used in some wordings, particularly in Lloyd's standard K-form PA wording. The wording definition itself is that it means disablement, which entirely prevents the insured person from attending to their business or occupation. So it is actually just loss of income cover, and these two, loss of income and TTD, can be used interchangeably. Because of our licensing in the region, we're predominantly in the FAC-RI space rather than the direct space, and therefore we do have some flexibility in the definition of the terms depending on local requirements the cedents need to meet. We would expect the definition to be roughly there and thereabout compared to the Lloyd's one, but we do appreciate that certain local markets would have their own unique requirement. Loss of income can be purchased either as an individual cover, normally sold by agents, platforms, or trade associations, or as a group cover. Group cover is normally quite straightforward as just as a no-fuss add-on to their existing group personal accident policies. Next, we're going to talk about exclusions. So exclusions will of course vary depending on your products, but I thought it would be beneficial to highlight two quite common exclusions for loss of income products, and they are pre-existing conditions and mental illnesses such as depression. The next question on the slide is, can you protect 100% of your income? And that is not something that we would normally offer, largely to avoid moral hazards, especially if you are an individual and you take out your own individual policy. If you can receive exactly the same income resting at home compared to being back at work, chances are your recovery time will be longer, will be magically longer than otherwise. So we don't tend to give up to 100% limit, especially for individual purchase policy. For companies, however, there are instances where we have agreed to give 100% of income. For companies, because oftentimes they would take out a policies that's tied to their key performers or star employees. So we're quite comfortable with the level of moral hazard because it's not them, they're reliant, they are losing income as well as a business. So there's a higher chance that we would agree to offering up to 100% of income. Next. Next, we're going to look at how we can structure placement. So loss of income policy can be done either on a standalone loss of income cover or package with other PA benefits, which tends to be the way that it's usually done if it's done in Asia. In terms of limit, it's expressed normally as the percentage of your average weekly or monthly salary, but not normally exceeding 85% of the income for reasons such as moral hazards that we just talked about. And there's normally a monetary cap to it in addition to the percentage cap. In terms of deductibles, it's usually excess of a fixed number of days, and that can range from 7 days, 14 days, 30 days, all the way up to 120 days. And for duration, the market standard right now is 52 weeks, which is a year. And what I meant by duration is how long you will continue to receive a salary after your accident or illness. Whilst the market standard is 52 weeks, we have also in the past offered up to 5 years, depending on the client's needs, but it's always tied to either an accident or a sickness that occurs during the policy period. So the policy period would be 12 months and something can happen and you continue to be paid for 5 years afterwards. So as an example, assuming you have an annual salary of 50,000 US dollars, your loss of income policy limit and deductibles will likely be expressed as 85% of average weekly salary, capped at 1,000 US dollars a week, maximum 52 weeks in excess of 14 days. You notice there's a little bit of top up in the weekly maximum amount compared to the individual's annual salary. Oftentimes, we build in a little bit of room to allow for flexibility in case there has been salary reviews since we first underwrite the policy. Next. Next, we're going to talk about pricing considerations. The most important bit is the one right in the middle, whether or not you're buying accident only or accident and sickness. That will, of course, have a significant impact on your pricing, considering the proportion of sickness claim in temporary disability situations. We'll start from the top. So group size is important because the larger the group, the bigger the volume discount you'll be able to get. And that's why on a per person basis, per person pricing for a group cover, particularly one that's mandatory for all members of the group, will always be more affordable than your individual opt-in purchase. Next is on age. Of course, age would have an impact if you are buying sickness cover. To a lesser extent, it would also have an impact on the accident-only purchase, but much lesser impact. Wage roll is effectively the exposure concern here, so that would be something that underwriters would ask to price a loss of income policy. Limits and deductibles. A limit is tied to wage roll, so that's quite straightforward. But limit is also in the sense of the duration of the benefit period. Are you buying 12 months or are you buying up to 5 years? And deductible, of course, the number of days would have this impact on your loss of income pricing. Class of occupation. We have a very broad risk appetite when it comes to occupational classes, and we can cover occupations from your class 1 office workers to your deep sea divers or explosive handlers and most things in between. We just have to know what we are covering. And lastly, on loss record, if you have a loss record, of course, that would be great, but appreciate loss of income cover is not normally sought in Asia. And in that situation, if you're trying to price a new program, any information that you can obtain from the client HR department in terms of time off work will be very helpful in our underwriting process as well. Next. We've talked about loss of income from the broad categories of employers and employees. And within that, we've also put together a list of the different types of insureds we have worked with on the general PA side. They range from government departments, ship owners, airline operators, and film and event organizers, all the way down to universities and schools and workers' associations. For reasons ranging from meeting legal requirements, providing employee benefits, and the protection of a business income, or as a value add-on to your ultimate client, these insureds sees the need for an A&H insurance. Some of them purchase just PA cover, whilst others have bought the full range of PA benefits, including temporary disability. We hope this list will give our brokers in the audience some ideas as to where to start to broaden their PA offerings after this webinar. Next. Lastly, I want to talk a bit about the accident and health team globally as well. We're an expanding team in Asia with underwriters based in Singapore and Sydney. We also have a local head of claims for the region sitting in Singapore with local claims authority. But in addition to that, we're also part of a larger international accident and health team. We realized that when we put this slide together and we actually ran out of space. On the A&H side, we have one of the largest A&H teams in the London Lloyd's market. Across the 3 offices in Singapore, Sydney, and London, we have a total of 13 underwriters. Loss of income insurance is not very widely purchased in Asia, but we hope that our experience in underwriting this product as a result of accident or sickness globally will help our cedants and brokers in the region to put together a product that will best capture their local market needs and meet their risk management requirements. Next. And a little bit of food for thoughts before we go into Q&A is a quote from the Council of Disability Awareness in the US. It says, "Your paycheck is your most valuable asset. Is it protected?" We can, of course, get into a discussion over whether or not it is really your most valuable asset, but I think it's safe to say that it is one of the more important assets that's often overlooked when we looked at our personal insurance protection. I hope you walk away from this presentation today with a better understanding of the risks involved and how the insurance market have readily available products to plug this gap in cover. And with that, that would be the end of my presentation. Thank you very much for your time this morning. I guess we'll be moving on to Q&A right now, Zaihao.
Yep. Thank you, Heidi, for sharing this useful information. I guess even Andy Lau, the god of chaos, is vulnerable from everyday accidents. But on a more serious note, the importance of loss of income is even more glaring during the very uncertain times we are in now, right?
Correct, yes.
Yes, we have quite a few questions from the audience. I've got this one. The first one is, as mentioned in the presentation, there are an estimate of 100 million freelancers in China in 2018. Are there any general restrictions for this category in terms of the cover?
So with gig economy workers, the most important element is making sure that the sum insured that they're taking out, the income that they claim they would have is at a reasonable level. So in the past, where we have insured gig economy workers, particularly when it's done through their employers, like Deliveroo, for example, or Uber, they would have their own software to log the number of hours that the individual has worked and during the past month or past couple months, and that would give us a basis to determine the level of cover that's suitable for the individual. I think for the gig economy sector, that's probably the trickiest part. How do you ascertain how much that individual can make, considering the flexibility and the fluctuation they would expect to see? But with gig economy workers as well, and this is a little bit on the claim side, I think it's also important because with the permanent employee, when they're back at work because, they have HR and, their employer would be able to certify that. Slightly tricky with gig economy workers where they could have multiple jobs going on. We actually have a situation a while ago now, and this is quite an interesting example from a gig economy point of view. The individual is a male pole dancer. So he allegedly got injured and said he could no longer go to the establishment that he works at. And so he started claiming loss of income insurance. We paid because we thought it looked okay, and we continued to pay until we reached a point where we were like, surely he's better by now. And then upon digging a little bit, we noticed that actually he has simply just switched from one gig to another. So instead of actually dancing in a physical establishment, he started doing classes, virtual classes, and he started posting videos on YouTube. So that's another element when it comes to gig economy workers. So not only is it important to make sure they're insured at the right level, but at the claims stage as well, I think claims we need to be a bit more vigilant and to also watch out for moral hazards or potential for moral hazards.
I see. Thank you, Eddie. I guess that's another one to add to the list of high-risk occupations, exotic.
Exactly. We have a wide range of occupations.
I've got another question here from the floor. What other factors do we need to consider before providing loss of income cover, i.e. moral hazard, for example?
Yeah, so moral hazards, we've just covered that, and that's not just for gig economy workers as well. I think at times we handle a lot of loss of income claims through our third-party administrators, and we notice that sometimes certain individuals are almost reluctant to get therapy or to go to physio to get them back into work. So that's something that we tend to watch out for. Of course, the limit and the structure of it as well. I think this goes back to even for a regular employee, is the level of cover they're taking out adequate? And if it is, do they have other policies in place that might contribute to their loss of income in the case of an accident or illness? Because sometimes there's a little bit of overlap with other products as well. So that's something that we tend to bear in mind when we look at loss of income risk.
Thanks, Heidi. Just one other, a few other questions that have popped up. I see many questions coming up now. So one of them is, I'll combine them together. So here it goes. Does loss of income cover non-work related illnesses or injuries? And in terms of the loss of income cover itself, presumably it's a 12-month indemnity period. Is there a maximum limit for the claim per policy, like the number of claims, perhaps?
Okay, I'll try to cover all of that. So for loss of income policy, if you are taking out a 24/7 hour cover, if that's your operative time, then we'll cover both work-related and non-work-related accident or illness. And that's oftentimes quite handy because work-related accidents sometimes is picked up by workers' comp or employer's liability. That in itself is a bit tricky because you obviously have to prove negligence in some cases. But for sickness as well, it's important to get a 24/7 cover because sometimes it's actually difficult to ascertain when the sickness first manifests itself. So if you have a restricted cover, when it comes time to prove that the sickness is started during the operative time of the policy, if it's not on a 24/7 basis, that can be tricky and that can take time, which can then have an impact on your individual financial well-being. In terms of the maximum limit, so we tend to cap it at 85% of an individual's pre-accident or regular salary as a limit. In terms of the duration, so market standard is a year. We could offer up to 5 years. And to go back into our licensing in the region as well, because we largely do facultative reinsurance. We have in the past agreed to longer terms benefit period, so longer than 5 years, provided the cedant is okay to accept a sunset and commutation clause on their reinsurance program. So we have some flexibility in that as well in terms of the limit, both the average weekly or monthly limit and the duration of the benefit policy, of the benefit period. And lastly, on can you claim twice? Is that the question, Zaihao?
Yes, so it's about, is there a limit on the number of times you can claim from a single policy?
So it depends on if you are buying accident and or sickness. So if you're buying both, then of course, unfortunately, I suppose you can have both an accident and a sickness that would result in your temporary disability during the policy period. So that would be fine. In terms of sickness, sometimes in the policy, depends on the product itself, sometimes the deductible is on an aggregate basis. So if the same conditions were to happen again, and if, say, the first time it happens, you were only out of work for 7 days, the second time it happens, you're out of work for 10 days, and then that sort of all in 17 days would be treated as a deductible. So it depends on how the deductible is worded in the policy wording. It could be, we've seen products that's both on the basis that I've just mentioned, but also on a separate basis that every time something happens, you start from the beginning again in terms of your deductible, or not, you just go straight into sort of payment. So there are different ways to structure it. And I think the more important bit is to understand what the client or the individual sees as the most, as the risk that they want to cover. And then we can sort of structure the products around that.
Right, so I see. Thank you. Thanks for that. I just have a few more questions also. They still keep coming in. So one of the questions will be surrounding the pandemic situation we are currently in now. So the question is, will you be covering the pandemic? I guess, well, it depends on the coverage that you can offer for such communicable diseases, pandemics, and of course, are you affected by any claims for the pandemic that we are currently seeing?
So on the issue with pandemic cover, so or I guess more specifically, COVID is what's on top of everyone's mind. So we at the moment we do not provide COVID-19 cover to any of our new products that we're quoting. The big part of it is because it's a known risk, so you can't really insure a house when the house is already on fire. So that's part of the reason. In terms of general pandemic or communicable diseases exclusions, we will be putting that on most of the products that we underwrite for has been since COVID-19 started. So that's our current risk appetite. As regards to losses, I suppose you can read all about it in the insurance media about what the market is facing. I mean, it's touch wood, I think Asia probably would be relatively better compared to some of our counterparts in different parts of the world. But I also think that that's probably tied to a little bit of a gap in cover as well, especially on the A&H side, that is.
Thank you, Heidi. I think the governments in the region has definitely taken a very proactive approach to the pandemic. So I feel very safe because of that as well. So there's this question from the floor. Would the loss of income claim trigger when the insured is in between two jobs? So that is when he loses his current job due to an accident and is currently looking for another job opportunity. Would the LI cover still continue?
So the loss, so that would depend on whether or not it's a policy that's tied to the individual himself, or if it's tied to the employer that he's working with. Of course, if it's tied to the employers, as soon as he's not not a permanent employee of the employer, cover will cease. So he wouldn't be covered for that period in between, which is why it's also important to look at your personal top-up options as well. Almost the same situation as the regulations in China, because it varies between city. So if you're moving cities or moving jobs between, to have a personal policy that ties to you rather than just to your employer, it's quite important for a situation like this. If the individual has a policy that's already in place, if provided that at the time that he's actively at work, then of course he will be covered.
Thank you, ID. There's this question on mental illnesses. The question is, when will the insurance recognize mental illnesses as part of the covered perils of this loss of income cover, or even for accident and health insurance?
So it's a standard sort of exclusion for the product, particularly on the Lloyd's wording. But that said, we have seen wordings in different parts of the world that cover for different occupations that do cover mental illness. So for example, with pilots, mental illness sometimes is paid out as well, depending on, because you can really structure your benefits quite differently with A&H, because it's a bit like going into the supermarket. So you sort of see one thing, you pick it, choose it, kind of. So what we have seen is that, yes, mental illness for your regular employees is still not something that's popularly or widely purchased. But we see that with occupations such as airline pilots or flight crews, where the limit paid out will be a little bit smaller, admittedly, than other accident and sickness, but it is a covered peril under some of those wordings.
I see. So the Lloyd's for Canopia's A&H cover, we do cover more than the market can offer. So that's I guess value added.
I mean, we did look at it on a case by case basis.
Right.
Yeah, I think for individual, we would be slightly more reluctant to offer it for an individual purchase policy, purely because of the anti-selection element of it. But yeah,
Okay.
we have agreed to cover it in the past for certain occupations.
Thanks, Heidi. Thank you. I think we are coming to the end of the webinar. But let's try to squeeze in as many questions as we can. I think there's two questions that are quite similar. I'll try to combine them together.
Okay.
Here it goes. Does Canopias offer loss of income protection insurance to both corporate and individuals? And so the first person who asked this question is referring to the mainland China market. The second person is referring to Hong Kong residents. So do you provide them direct and whether through corporate or individuals?
Okay. So we do actually do both. So we do both individual loss of income cover and group or corporate loss of income cover. For individual, because of how we've set up and because of licensing in the region as well, it tends to be a facultative reinsurance of local cedents. And it tends to be packaged together so we can process the risk more efficiently, be it sold on platforms or targeting particular agents or particular associations to distribute the product. But yeah, we do both.
Okay, thank you. I've got a question here. Does such policy have double insurance clause? So, for example, for work-related injury, if the insured person receives workman compensation benefits, will you deduct such a benefit or income from the loss of income from your ultimate payout to the insured? I think that's a very good question. It's quite applicable to most of.
Yes, it is. And the answer is that yes, it will take into account the payout that you will receive from other policies in place. Because otherwise, what we're trying to avoid here is a double bubble situation. I mean, you can't possibly be better off claiming from two policies in terms of an income compared to what you normally make. So yes, there will be a reduction in the benefit if you are also getting paid from another policy.
Right. Thanks, Heidi. So I see there is one last question. I think we'll be able to cover all the questions today.
Yeah.
Is there a product covering income loss or loss of income due to any other causes other than unemployment or retrenchment that's not related to A&H?
Not something we currently offer right now. I think for us, particularly as an A&H team, we would target or we would design products that's tied to either an accident or an illness. I think that's quite different compared to trying to underwrite a general unemployment insurance policy where you then have to look into the financials of a particular employer or the general economy. So that's not something that's would fit within the remit or the risk appetite of the accident and health team.
Right. So the perils are still primarily accidents or illnesses. Do I understand this correctly?
Yes, exactly. And I think if you remember the statistics that we were talking about, the 33% chance of getting disabled temporarily during your working career, I think that in itself is probably something that the individuals and corporations should bear in mind as well when considering their risk management needs.
Definitely. I agree on that too. So thank you, Heidi. Thank you everyone for joining us for today's session. We have come to the end of the webinar today. I apologize if your question has not been answered correctly during the Q&A session. Just feel free to reach out to either Heidi or myself after this presentation if you have any other inquiries on the presentation or other specialist A&H products that Lloyd's Asia can offer. So just feel free to reach out to us. Today's session is recorded and the link will be provided shortly this month. We look forward to your participation in the upcoming webinars that we will be hosting in August and September. You should have received the email invitations for the August sessions earlier this week. So again, I'd like to thank everyone for joining us in our webinar today. Thank you.
Thank you, everyone.
Bye.